Commodities are on fire in the wake of the Russia-Ukraine crisis, and aluminium is on a structural uptrend. The combination of the two factors makes it prudent to look at National Aluminium Company Limited, the lowest cost producer in the world. The company is Navratna Central Public Sector Enterprise, with Government of India holding 51.28% stake as on 31st December 2021. In the last decade of 2010 to 2020, aluminium prices have peaked at around $2,250 to $2,300 per ton. In 2021 and 2022, aluminium prices have witnessed supply constraints and higher demand, which led to record prices. Higher energy cost and decarbonization policy from China further led to production cuts. As per Alcoa, aluminium is likely to remain in deficit for the second consecutive year. In 2021, aluminium was in deficit for about 0.9 million tons, and in CY22, deficit is likely to be around 1.4 million tons. China is expected to remain in primary aluminium structural deficit of approximately 1 to 2 million tons. Higher energy prices have led to cut in smelter capacity in Europe, with a total projected supply impact of about 600 to 700 kiloton per annum, which is about 15% of operating capacities. Aluminium also finds various other applications in different industries like electric vehicles, packaging of oil, consumer durables, and others, which is likely to drive higher demand for aluminium. NALCO has capacity of 4 pot lines of 240 pots each, and recently it operationalized all the 960 pots at its existing smelter for the first time in its history, and with that we expect incremental volumes in March 2022 quarter. For running 960 pots, NALCO requires 900 megawatts of power, of which 200 megawatts will be sourced from outside, while the rest will be from captive sources. Outside sources of power will be marginally higher than the cost of production. However, higher aluminium prices will partly mitigate the above power cost. NALCO is setting up fifth stream in its existing alumina refinery, which shall add 1 million ton per annum to its existing installed capacity of 2.275 million tons at a capex of around 6,500 crore rupees. In order to feed bauxite required for the above fifth stream, sourcing will be done from its existing Panchpatmali mine. Further, the company has been awarded Potangi bauxite mines, which has reserves of around 75 million tons for meeting the incremental bauxite requirement of 1 million ton of alumina. Potangi mines are likely to be operational by March 2024. In manufacturing of aluminium, nearly 35 to 40% of the cost is power. With a captive power plant, NALCO requires around 6.5 to 6.6 million ton of coal to operationalize its smelting capacity. NALCO has signed fuel supply agreement with Coal India and its subsidiaries for around 5.606 million tons, while the balance is bought through e-auction route. In order to mitigate the higher coal cost, NALCO has won the bid for Utkal D and E blocks with capacity of 2 million ton each. Utkal D has received all the statutory clearances, and NALCO expects mining in phased manner over FY24, while Utkal E block is likely to take some more time before receiving the clearances. NALCO is pure alumina and aluminium play with prices determined from London Metal Exchange. Hindalco usually hedges about 30 to 35% of its volumes at fixed prices for aluminium, while NALCO usually sells the commodities on the spot basis, making it susceptible to fluctuation in metal prices. It may therefore gain disproportionately in times of sudden spurt in prices. As on 30th September, NALCO had cash and cash equivalent of 2,960 crore rupees, which is 16 rupees per share and 13% of market capitalization, and during FY22, it declared interim dividend of 5 rupees per share. NALCO has never made a loss of EBITDA levels across all the cycles. At current prices of aluminium and based on the operating cash flows, the company can easily sustain paying higher dividend and capex through internal accruals. Being cash rich, NALCO has invested and committed toward investment which can dilute its return ratios. Investment in joint venture for caustic soda plant with Gujarat Alkalis, aluminium park with Odisha industrial infrastructure, and high-end aluminium alloy plant with Midhani and other such projects. As on 30th September, investment stood at 311 crore rupees. NALCO's December 2021 quarter earnings were above street expectations on the back of higher volumes. EBITDA was higher riding on higher alumina sales and lower power cost. Investors with high risk appetite can buy NALCO at current levels and on declines. Key risk remains correction in alumina and aluminium prices and lower volumes due to cyclical downturn.